I'm Mohit Joshi, President Infosys, and it is my pleasure to introduce Harit Talwar, Chairman of the Consumer Business at Goldman Sachs. Thank you, Harit, for taking time to participate live on this fireside chat. Marcus by Goldman was a historic move with a 150-year-old Wall Street bank creating an impact on Main Street with a completely digital presence. Today, we will discuss how Goldman Sachs launched and scaled its consumer banking offerings. Harit will share the inside story of building the business from scratch, the vision for the future, the challenges overcome, and the lessons learned along the way. Thank you so much again, Harit, for making time for us today.
Thank you very much, Mohit. Thank you for inviting me. I'm particularly delighted to join today because in this journey, which you talked about of building Marcus, Infosys has been a very, very important partner of ours. So thank you very much.
Thank you for that, Harit. Thank you for that testimonial right at the start. So, if you could just share a little bit about Marcus, the brand, what it stands for, what it means to consumers. And 2020 has been a unique year, right? I think it's been an unprecedented year. How has Marcus dealt with the events of this very unique year?
Sure. Um, you're right. 2020 has been a very difficult year for all of us as people, society, the planet. However, from a business perspective, it has been our best year yet. Marcus is all about building a digital consumer bank, a bank on the phone, and we want to disrupt financial services just the way Apple has done for music or Amazon has done for retailing. And in this year of the pandemic, it has been a strong reaffirmation of our business model of delivering a bank on the phone. We are in our fourth year of business. We already have more than 5 million customers to whom we deliver products that add value, are simple and transparent. Our deposits are more than $100 billion, or close to $100 billion. Assets are around $7 to $8 billion. The mismatch is deliberate. This year, we've been very, very busy. We've accelerated the momentum. We've expanded our partnership across different products with Apple. We've launched partnerships with Amazon and Walmart and Stripe and JetBlue and AARP, etc. And under our proprietary brand, we've launched our mobile app, which we are very proud is rated as one of the best apps on the App Store. And we've been working furiously on launching more products, Marcus Invest, and a modern checking account next year. So all in all, we feel very good about how we are helping customers and how we are building a modern consumer business, as you said, inside a 160-year-old investment bank.
So Anand, clearly, Marcus has been an outstanding success, from a consumer finance perspective, from a digital banking perspective. And I can say so firsthand because I'm a Marcus consumer as well in the UK. What would you say are some of the key factors behind the success? Because a lot of consumer finance brands, especially by large banks, have come and gone. But this one has been uniquely successful.
So first of all, thank you very much for having your account with us. We really appreciate that. And we really appreciate what you're saying about our success. I would say the first thing I would say is we never take our success for granted. We work very, very hard. It's hard work. It's not easy. But, in this journey, I'm reminded of Sound of Music. If you remember that song, Do Re Mi, where it says if when you start to read, you start with ABC. When you start music or singing, you start with Do Re Mi. And the analogy for us in the business world is when you start a business, you start with the customer. So understanding the customer and their pain points and what they want and what is their journey is core and fundamental. For example, before we even launched, before we had even one account, we had already spoken to more than 10,000 consumers to understand their pain points. And pain points is not merely in terms of what they want in terms of interest rate or product or service, but how do they interact digitally? How do you build a site or an app which they like, which they feel good about? So I think Fundamental to everything is having the customer as a North Star. The second thing is we are all for profit businesses. We have to understand how does that translate into benefits for the shareholder. And then everything else is a conduit. Yes, you need a very, very talented team. You need to make some very fundamental engineering architectural choices. You need risk management, you need marketing, etc. But the real special sauce is how do you bring all these capabilities together to solve customer pain points? That is really the special sauce, I think. For example, we are organized, of course, by functional competencies. But if you ask anybody in our organization, what are you working on? They will say, I'm working on the customer onboarding journey, or I'm working on the customer password reset journey. That person could be an engineer, could be a design person, could be a legal person, compliance person, marketing person, it doesn't matter. You bring capabilities together to solve customer problems.
Thank you, Harit. I think the point on the customer focus and bringing the various streams together is very well taken. Uh, Succeeding in a startup is hard at the best of times, but actually succeeding when you've got the legacy of a very large and a very successful 150-year-old institution is possibly even tougher. What are some of the learnings, for you from this experience?
Yes, it is tough, no doubt about it. Uh, you know, we have an advantage and challenges. Our advantage is that Goldman Sachs is the only large consumer bank which didn't have a legacy consumer business. So we were able to build it from scratch like a startup. As we've said, we are a 150-year-old startup. And we could build a new engineering stack, we could be agile, we had new business practices, etc. And yet, on the other hand, we have a balance sheet and a risk management DNA and a strong brand. And these attributes are important to be a successful disruptor in a regulated industry. So that was the advantage. But there are also disadvantages. You're doing something new inside a 150-year-old governance structure. And therefore, what is your operating model? How do you make your business end to end embedded in the business and yet have the corporate governance and risk management oversights? That is a very important choice. For example, where do you locate your central office? We have chosen to locate it inside Goldman Sachs. Some people feel that if you have to be away from the mothership so that it doesn't contaminate. My personal view is if you think it will contaminate, you've lost the battle on day one. You've got to learn how to navigate the system to innovate from within, because that's sustainable innovation. The other thing we've learned the hard way is that building businesses today is like a flash mob, not like an opera. In an opera, you have a conductor who's stern, who tells everybody what to do, when to do. Everybody is very talented and good, and they follow obediently, and voila, you have a great symphony. Today's world is different. You're agile, you're iterating, you've got to do things differently. And therefore, what we've seen is a flash mob where there is a North Star towards what you're having the whole team work towards, but there is a certain amount of energy and a certain amount of entrepreneurialness. One of the things I learned is crisis management can be a great tool. We have a crisis every week. Maybe I'm overstating it, but we have a challenge every week. Now, if the crisis is the same, then it means you're stuck. If the crisis is new, it means you're making progress. So I think embracing speed, embracing ambiguity, embracing iteration in your business model, embracing innovating from within, rather than saying, no, this is how things should be done, are ways on how you build a business inside a large organization.
Yeah. Thank you, Harit. I think the analogy of a flash mob is something that will stay with me. I mean, given that it's Wall Street, I'm assuming it's still a very well-dressed mob. But no, more seriously, I think this paradigm of building a successful digital business within a large institution is something that most financial institutions across the world will have to replicate. Uh, Almost nobody else has managed to do it successfully. So kudos to you and the team for this very successful initiative. I just want to build on something that you'd mentioned in your previous response, where you've spoken about the importance of building out a new technology stack. So, can you just tell us a little bit more about why that was important, what the stack looked like, and from our perspective, what was Finacle's role in this modern stack?
Sure. So when we looked at it, we were very clear that we need to have a multi-year engineering architecture, even though we will not build everything right away. And in that architecture, what do you want? You want scalability, you want robustness, you want reliability, but you also want speed. And you also want not that you build today and it becomes legacy a few years later. You want the ability to constantly innovate. Therefore, we took an approach of building our stack into different components. And to be very simple, there's a front end, there's a middleware, there's a back end, there's data. And what we wanted to do was we wanted to build our IP in the front end and the middleware and use best of breed capabilities to complete the stack. Now, in doing that, you wanted a backend which is modern. You wanted a backend which is in sync with the API microservices architecture. And this is where we were delighted to work with Finacle. And we went through a fairly rigorous RFP, and we were choosing between a modern stack which makes API microservices architecture possible, and yet is large enough for compliance and robustness needs. So therefore, we chose Finacle, and we are very happy with that choice. We've done it both in the US and UK, and that's very important. The other thing is that where we have taken outside systems, whether it's Finacle or other capabilities, we have made sure we don't customize them because we want the benefit of the engineering organization's continuous upgrade. And therefore, the customization that we do is in the middleware and the front end rather than in the back end or in the capabilities of modules which we have purchased. So we've stitched together a platform which is both a mix of build and buy. When we started 5 years ago, it was not on the cloud, and now it is migrating to the cloud.
And I think the speed and the scalability that you managed with Marcus really would not have been possible without the choices that you made. And so I think the importance of having a modern technology stack has really paid off. But now pivoting slightly away from Marcus to broader industry trends, Harit, uh, there are a lot of people competing in a reasonably crowded space. So you've got the traditional large financial institutions, you've got challenger banks, some of whom are really uh, also legacy, and then you've got the fintechs coming in. Uh, who do you think is going to win the battle for mind share and wallet share uh, for the consumer?
So you're absolutely right. If I take the US consumer financial services as a microcosm of what I think is happening around the world, first of all, it's very large. In the US consumer financial services is close to $1 trillion of annual revenue. And there are many, many players of different types: large banks, regional banks, community banks, fintech players, online banks, technology companies, etc. And yet, the customer is by and large not happy. Our research shows that majority of the customers don't trust their bank or card company. An overwhelming majority of the customers would rather visit their dentist than visit their bank branch. And this was pre-pandemic, and it has accelerated during the pandemic. And if anybody thinks that branches are not a dinosaur, depends on different time periods in different markets, they need to reflect. So in this makes it ripe for innovation because it's large, it's many players, it's reasonably fragmented. People think it's concentrated, but say if you look at the US, the top four banks account for 50% of the deposits, and there are 4,000 other banks which account for another 50%. Unlike, say, search engines or Coca-Cola companies, cola companies, it's very, very concentrated. So this is ripe for innovation. In this innovation, I don't think it is a particular sector which will win and a particular sector or segment which will lose. It will be different players from different segments which will win and lose. And I think the differentiating factor will be which are the ones which have a very intimate relationship with the customer, which is beyond transactional, and which are the ones who are able to continuously innovate fast, and which are the ones who are able to attract good talent. So it is these soft aspects which will make winners and losers, because it is these soft aspects which will help you build a competitive moat around your business.
I think that's a very valid observation, Harit. A lot of people think that banking is a winner take all business, but it's not. It's a winner take most business. Technology is truly the winner take all business. And in that sense, having that competitive edge constantly reinforced with talent, with technology choices, I think will be critical to determining who or how many players will win. But you've also spoken
You know,
about
you're
your
so
strategy of that. Do go on.
if I may interrupt, sorry, you're so right. And I think the evolution will be from offering products and services to offering a platform where
Correct.
customers feel comfortable that when they come to your platform, they can be financially empowered to make choices and decisions. And they can understand the choices and decisions they are making, irrespective of whether those products are manufactured by you or not.
So is that what you mean when you've spoken about your strategy of driving banking as a service? Is that how you see it?
Yes, um, banking as a service or large partnerships or financial cloud or whatever you may call it is a very important part of our strategy. So we go to market with our proprietary Marcus brand, direct to consumer, or we take not or additionally, we take our product capabilities, our product manufacturing capabilities, and we embed them into other ecosystems, because that maximizes distribution and reach and helps us reach where the customer is rather than telling the customer to come to us. Our best example of that is the Apple Card, where we built the credit card product and embedded it into the iPhone, so that's where the customer is. Similarly, on seller financing or small business financing, we have taken our product manufacturing capabilities, which is built on Finacle, and embedded it into the Amazon and Walmart platforms to enable e-commerce for them. So banking as a service is, I think, going to become increasingly common because it is a complex industry and there are going to be more partnerships rather than competition.
So I think that's an important element of the future of finance. This whole ecosystem approach, and uh, I guess for too long, banking has operated as a completely vertically integrated business where you manufacture everything yourself and then you sell it through a company store, which effectively is the branch. You've spoken about the ecosystem being part of the future of finance. Are there any other elements you think we should be looking at?
So I will tell you what is not the future of finance. So artificial intelligence, machine learning, data, marketing, risk management, engineering, design, none of these are the future of finance. Those are capabilities. The future of finance, in my mind, is an extreme obsession with customer centricity. And it is the ability to harness all these very critical capabilities into solving customer problems and earning returns for shareholders. That is the future of finance. Because if you go across industries, they are very obsessed about customer experience. And if you go into banking in general, they tend to look down on the customer. They think that they're a complex industry, they are a sophisticated industry, customers should understand them. No, it needs to be turned on its head. Anything which is simple is more sophisticated. And we need to be able to add in every interaction with the customer value, simple and transparent. That is the future of finance.
No, you're absolutely right. I think for too long there has been obsession with tooling, as you mentioned, the tooling around AI, the tooling around machine learning or around the cloud or along the stack, and not so much of a obsession around the customer. And there has equally been the temptation to blame the regulator for a lack of focus on the customer, and that is obviously not the complete story. So I completely take it. I think other businesses like mobile telephony, like entertainment, have been completely transformed by the focus on the customer. And what you're saying is that for the consumer finance business, or actually even more broadly for the insurance business, for the commercial banking business, the focus on the customer and on simplification is really what is needed.
You're absolutely right. And all these capabilities are very important. Don't get me wrong. We spend a lot of time and money on them, but they're a means to an end. And the end is the customer. And it's not a slogan about, okay, in how many seconds you'll pick up the phone or how often you will do a CSAT survey. It is how you will design your offerings around the consumer and around the consumer journey, and how you will add value along that consumer purchase journey. That's the important thing.
Right, right. So, Harit, obviously, the last 4 or 5 years in Marcus, uh, I'm sure have been very exciting. But you've had a long professional journey, right, across Citi, across Discover, more recently Goldman Sachs, across multiple geographies. Can you share a little bit about your own personal career journey with us?
Sure. So I got into consumer financial services or consumer banking almost accidentally out of business school from Ahmedabad in India. I have spent, as you said, I've lived and worked in 4 countries and 3 continents and 6 cities, and always been in consumer financial services. Been fortunate to be involved in startups, turnarounds, large scale businesses, transformational M&A, acquisitions, divestiture. And across all this, what I have learned is that the world is more similar than different. Uh, no matter which market you are in, customers want great pricing, great service, easily done. No matter which part of the world you're in, your employees want to be paid well, to be treated well, and to have career prospects. Now, there can be some differences, but by and large, we are more alike than not. The difference is in emerging markets where I did, the challenge was to create markets because infrastructure itself doesn't exist. The product set doesn't exist. And there's the challenge of creating markets, but the margins tend to be higher. And when you're successful in creating markets, the competitive intensity is lower. When you're working in developed markets, the infrastructure is there, the markets are there, the bureaus are there, the data is there, but the competitive intensity is very, very high. And the markets are not high growth markets, and therefore you're competing for each point of market share. And therefore, it's not enough to be good. You have to be better than good for customers to reward you with business. But I think if I look at my career, if you focus on the customer, you focus on people, you focus on the P&L, and you focus on commonalities, there's more common than different.
Yeah, I think one of my old bosses used to say that we all wear our pants one leg at a time. And so, human beings and markets are more similar than different across the world. There are obviously nuances, and there's obviously, like you mentioned, some parts of the world you're prospecting and you're building out businesses, and other parts of the world, you're competing more aggressively. But the essentials of human nature and client expectations are very similar. So, Harit, what advice would you offer to those looking to build long, successful careers more broadly, and then in financial services more specifically?
So first of all, I'm not a guru or a coach or an expert. So whatever I say, people should take with a big pinch of salt. But in my experience, I always tell people when you're building careers, you've got to love what you're doing. And you have to, the first thing is like a building block. You've got to be able to deliver what you're expected to deliver. You can't say, no, I don't like this. This is the reason. This is the excuse. No, irrespective of anything, you've got to be able to learn to deliver. The second thing is you must enjoy working with people, Because unless you are complete Einstein or Steve Jobs or something, which most of us are not, at least I am not, you've got to learn how to like people and work in teams and work well with people. You shouldn't be the person where somebody you walk into the room and people say, "Oh my God, this guy is good, but he sucks the energy out of the room." You don't want to be known as the jerk. So the third is you've got to see what is the higher purpose of the organization, not just what is your role, but what is the role and what is important two, three levels above you. And so, if you can understand what is the overall objective of the organization, how your role plays an important part to it, you deliver what you've got to do, you work well with teams, I think you build a successful career.
So execution, temperament, and and finding that sense of purpose for the organization and for yourself.
Yes, that's more eloquently put.
No, no, that makes a lot of sense, Harit. And obviously, look, again, it's been a uh, like I said, it's been a very successful journey for you across multiple organizations, multiple geographies, working to build some businesses while building brand new businesses like you have at Marcus. So I have to ask you, what's next for you?
So, when I was at Discover and Goldman Sachs was hiring for this job, I didn't want to join Goldman Sachs because I was running a large business with thousands of people and billions of dollars of revenue and profits and large balance sheet, etc. And here I came and became the first person because I was very intrigued by the challenge of building a modern consumer business inside an old investment bank. So if I look at my career, I've always, when I left Citi to join Discover, when I left Discover to join Goldman Sachs, I've always been very intrigued by reinventing myself. And I've always reinvented myself using the same strengths, but in different roles. I don't know what I'll be doing. What I do know that I'm not going to golf and play bridge the whole day because I suck at both. I've been very humbled by the number of calls I've got. Um, Currently, I'm still at Goldman Sachs. I'm still the chairman of the business. I'm still a partner at the firm. I'm in no rush to do something else. My commitment is over here. But over time, we'll see what I do. But I do know that I expect to continue to remain engaged in the for-profit world, reinventing consumer financial services.
As has always been the case in your career, Harit, I'm sure that the next act will be, even bigger and better. I have no doubt about that. And thank you again. Thank you for your time. Thank you for the insights that you shared with us, and for the audience as well. I hope the session was useful. That you could take away a lot from the discussions, like I did. Please do feel free to come back and view the recording of the session. Look out for the follow-up mail from our team on the video link. Stay tuned to the rest of the Finacle sessions as well. There's some really high quality content coming on later. And thank you for making time for this today.
Thank you very much, Mohit. I've enjoyed the conversation. I guess it's the sign of times that you're in one country, I'm in another country, the audience is in different countries. But I think that is really not just the future of work, not just the future of finance. I think it's the future of how we as people are going to interact with each other, in addition to hopefully meeting soon and shaking your hand. And we are delighted with our relationship with Finacle and Infosys.
Thank you. I look forward to that. And to use your analogy, maybe I should think of us as a flash mob of two that has come together to deliver this instead of an old-fashioned opera or symphony where we'd meet in a recording studio or in front of an audience of people and deliver the same. We've done this on consumer technology and hopefully quite effectively.
That's true. Although I must say, when it comes to opera or flash mob, I'm a terrible singer and dancer.
Flash mobs, I guess it is like you mentioned, it is the energy that you can generate and the energy you can distribute is what matters.
True. Well said. Thank you.
Thank you again, Adit.